we actually offer up to 80% of the buy side commission back to a home buyer as part of the closing costs that they can use to either pay down points on their mortgage, effectively get a lower interest rate, perhaps buy furniture for their house or a new boat if you so choose. There's a total of almost $700 billion worth of homes for sale in the US, which is up 20% from a year ago and the highest dollar amount ever. But meanwhile, our median home buyer age is up to 56. First time home buyer is up to 38. There's this narrative of 20% down, you need it. And I think across society, and it's really just not true.
Paul Cecil joins me here today. You can learn what his team is up to. Head over to ReAlpha.com. That's going to be a clickable link in the show notes.
Really appreciate you having me on, Jack.
So I was trying to make sense of your platform. I went to the website, ReAlpha.com. Could you kind of, for those people who aren't aware, could you kind of break down what you're doing there?
Absolutely. So ReAlpha is, in a nutshell, a end-to-end home buying platform. And so we're actually a NASDAQ listed company. NASDAQ AIRE stands for AI for real estate. And what we're doing is making a whole bunch of AI and technology tools to help the home buying process from end to end. So we've got everything from searching for the home, using kind of plain English to say what you want in a house, and then the AI find it for you, all the way through to the brokerage services, showing the home, getting a mortgage that works for your situation. We've got title in-house as well. And then looking to expand beyond that, even into kind of the post-close moving services and utility hookups, that sort of thing. All right. So because we've got every service house, we're able to kind of pass on a lot of benefits to the consumer, especially in regards to special programs and commission rebates. So because we have our AI doing a lot of the work, and because we're end to end and have all the services in one house, we actually offer up to 80% of the buy side commission back to a home buyer as part of the closing costs that they can use to either pay down points on their mortgage, effectively get a lower interest rate, perhaps buy furniture for their house or a new boat if you so choose. So that's kind of what we're doing in a nutshell. I'm happy to dive into anything in particular.
Well, let's start with the AI side of things. Would you mind sharing like how it's leveraged and maybe even what type of tools are being used?
Sure. Yeah. So there's internal tools and there's external tools for AI, right? Our main AI is named Claire, and a home buyer. Claire is basically the assistant, kind of a real estate agent equivalent for when somebody is looking through the platform at various homes. People can ask Claire questions that they would typically ask a realtor at any time, and get effectively instant responses on various things. So if, for example, I was looking for a home in Miami, I could ask, can you show me some homes with a pool, and definitely need AC because it's Florida and I want to be in this particular area in this price range, and then it will come back with results. And then once you go in and click on a home that you like, then you can ask questions about that home in particular. How are the schools rated in the area? What kind of events are known in this area that I could take the family to? That sort of thing. So, you interact with Claire as if it was a real estate agent helping you find your dream home.
So when you talk to Claire, what does it return to you? Just text, or is there photos and
Text, photos, and links to properties. So it is what it can do right now. And then eventually in the future, we'd hope to get a voice component in there as well. But text, photos, and links to properties and resources.
Okay. So you mentioned the commission-free piece of that. That's a pretty big shift, especially talking about a disruptor to the realtor world. Can you talk a little bit? You've already mentioned using that money towards buying down points and a few other things, but can you give us some other outcomes that you've observed so far?
Sure. So I'll give you a case study first. The reason that this commission-free model was started kind of goes back to that National Association of Realtors lawsuit that occurred in August. I'm sure you and your listeners are familiar with that. But, effectively what that did was make it so that if you want to use a buy-side agent, you have to sign a separate agreement with the real estate broker on the buy side. And then if the seller is not paying that buy side commission, then you have to cover it out of pocket, right? And so our original thesis was this is going to compress commissions and eventually it's going to go down to zero, right? It's going to be a race for zero. So we said, why don't we just leverage tech to get straight to zero? And how it kind of turned out that the market isn't quite ready to hear that commission free as of yet, right? So that messaging was perceived as a little bit too good to be true. And so what we've done lately is we've been kind of experimenting with a almost like a bundled services model, whereas the more services that somebody uses with us between brokerage, mortgage, and title, they get more of the buy side commission back as a refund. And so that's up to 80% of that 3% of the home that they would get or that we would normally get, we give back to the buyer. So on a $15,000 home, that's close to, $500,000 home, that'd be close to 13 grand that somebody could get back to. That could make a significant chunk in somebody's down payment.
Mm-hmm.
But I'll give you an example. You asked for specifics. We did a mortgage brokerage acquisition about a year ago now, and they specialized in the veteran market and serving veterans. We had a veteran client looking for a property in Florida, trying to get the VA loans because they weren't able to qualify for a normal mortgage. And veterans get all kinds of special benefits as far as mortgages go, lower down payment, often lower interest rates, things of that nature. They're looking around at these homes that are, that qualify for these loans, and they're just not liking them. And eventually they, stumbled upon ReAlpha because they were already working with our mortgage brokerage. And we were, because of that 3% that we gave back to them as part of their closing costs, they were actually able to get a normal loan, a normal mortgage. And so they were able to get into a neighborhood that they really liked and close on a home that was much better suited for them and, much nicer, to be frank. And so it was all because of that.
Mm-hmm. So I changed the subject slightly, with the housing market at like a 30-year low at the moment. What other trends are you seeing? It seems like anytime that I leverage AI, it kind of it surfaces things that I might have not have noticed myself.
Yeah. So speaking in the market in particular right now, there's a lot of interesting things happening. And there was a recent report put out by Apollo Global, one of your big private equity funds. And, they had some interesting stats in there. There's a total of almost $700 billion worth of homes for sale in the US, which is up 20% from a year ago and the highest dollar amount ever. But meanwhile, our median home buyer age is up to 56. First time home buyer is up to 38. Housing affordability is near record lows, and mortgage payments per month are averaging near 3,000, which is a record high now. And 44% of consumers are saying it's a bad time to buy homes due to interest rates and affordability. So we've got a very interesting situation on our hands because people are finding it more and more difficult to afford a home. We've got things like technology ways like AI coming in. All of these trends are coming together to basically create a affordability crisis for home buyers, I think. And what's interesting is we're heading into kind of what would be the hottest time in the year for home buying, typically summer. I think that ultimately tech can solve this problem. In real estate, there are a lot of middlemen throughout the process and a lot of places where money leaks out of the consumer's pockets, right? Everybody wants their cut. And I think this is a problem that tech can solve. But as far as the real estate market goes, we might be in for some short to medium term pain, I would say, right? Which is opportunity for everybody on your podcast, the listeners here.
Yeah, there's just a lot of disruption going on, especially with AI at the moment. I think it hit the technology sector first, but now with startups such as yours, you're talking about realtors. The last time I think we've seen anything like this was when we're seeing huge disruptions in the farming sector, when we're bringing in large tractors and huge equipment. The landscape is completely changed and it's only going to accelerate.
Yeah. There are a couple other examples too that I would say, right? Like stock trading, for example, you used to pay a stockbroker 1% of the total amount to place a trade. Charles Schwab came in, they did the flat $50. E-Trade came in, did $25 per trade. And then eventually Robinhood came in and said zero commission. Right? And same thing kind of happened in the travel industry as well. It was reportedly very common for people to use travel agents for booking flights and planning vacations and things. And then eventually media came along and just, it kind of cuts out that commission. So I think that technology has a way of streamlining some of these processes, but also creating a lot of new opportunities and new industries out of it.
I was doing a little snooping around on your website and I thought this was really interesting, especially with the narrative in our marketplace talking about how a lot of the younger individuals are not going to be able to afford a home. Like it seems like I hear that quite a bit, especially on the social media. The However, I think if memory serves me, your website somewhere said 86% of renters could afford a home. Is Am I remembering that correctly? And if so, how does your platform help them realize that American dream?
Yeah, I think that I think is driven a lot by our mortgage brokerage team is fantastic with helping people transition out of renting into owning, because we have a strong belief, of course, that home buying and home ownership is both obviously the biggest decision usually financially that somebody makes, but also the biggest opportunity for wealth building for people. And I think where that figure comes from is that a lot of people just don't know what's out there as far as programs to help them. There's this narrative of 20% down, you need it, and I think across society, and it's really just not true. I mean, the average down payment across the board, I think, is somewhere around 9-10%. But there are, of course, programs that you could get in at 0% down or 3% down or 1% down. And our mortgage brokers they say that because they can help people find where the money is. And, if people really want to own a home, I think they can. I mentioned obviously the commission refund and everything that we give back to the buyer. Our mortgage brokers can also find an additional, call it 2 to 3% in closing cost concessions sometimes as well. So if you combine that with the commission refunds, we can get buyers up to, call it 6% back on their closing.
Those every time you go down another rabbit hole there, it seems like you're clawing another percent here, a percent there. It really adds up pretty quickly.
Yeah, and we're looking to do kind of additional acquisition and offer services we're trying to put as much money back into the consumer's pocket as possible when it comes to this process.
Just to remind everybody, we're talking to Paul Cecil. You can learn more by heading over to ReAlpha.com. And if you found some value in what we're talking about so far, this show only grows if you share it with another investor. So please consider doing that. And if you're watching us on YouTube, give us a like and subscribe. Your company, your team now has had some pretty strategic acquisitions in a very short period. Could you talk a little bit about some of those acquisitions and how they all fit in your long-term vision?
Absolutely. We've been very focused on acquisition-led growth for quite some time now because of the regulatory nature of real estate for the most part. So because we want to offer all the services end to end, it was a lot easier and quicker for us to purchase already established businesses, especially the service businesses like mortgage brokerage and title. And, obviously we're looking at other ones. Instead of trying to build that from the ground up and work through all the applications and everything, we, did for the route of acquiring an existing company. So we've acquired 2 mortgage brokerages, which combined cover 30 states. And we've done a title acquisition, which covers 3 states. And so now we're working on getting that kind of brokerage piece of it caught up with the rest and expanded into those 30 states that we have for mortgage brokerage.
Hmm.
And, finally, we've done a tech acquisition as well we had this tech team in Nepal out of Kathmandu, and they were a top-notch engineering team that we worked with from the beginning and invested in them at a very early stage. And then they're the ones that build all of our tech that feed all of this. So we ended up acquiring them fully back. The acquisition got completed last April or May.
So I think the people that are listening to this show they're real estate investors. How does your platform possibly help with that, or how could they possibly get involved? Let's switch that focus.
Yeah, absolutely. So there's a couple different ways that investors get involved with this. I come from a little bit of a real estate investing background myself. So I do know that a lot of real estate investors look for things like off-market deals and often are already bypassing real estate agents and things like that. If they're going for a more turnkey home strategy, this could be a good option for finding a proper mortgage. Our mortgage brokers can work with investors as well and are, all investor real estate themselves. So I think that, with the refund and the closing rebates that we can find, it's worth checking out for a real estate investor that is doing a strategy that works off of MLS homes. We're not in the off market stuff yet. So that's one angle, right? And I was looking through your old episodes as well and saw there's also a lot of service providers for things both in the home buying process as well as beyond that. And we are looking for acquisitions that we can take on as well and add into the ecosystem specifically beyond the post close, things like moving and utility hookups and stuff like that. So we also have a full M&A team that definitely be interested in talking to people that have service companies that are perhaps looking to exit or become part of a NASDAQ listed company.
Could you talk a little bit? You mentioned the NASDAQ a couple times here now. That had to have been a pretty sizable lift on its own.
Yeah, it's not a straightforward or easy path by any means. NASDAQ's a very difficult process. And I think all in all, well, let me back up. When I joined, we had a different business model. We were offering basically investment opportunities in short-term rentals and kind of fractional them. Our goal was to buy short-term rentals and rent them out and effectively split them up into 1,000 different pieces for investors, right? And because we were trying to attract a lot of different investors for these properties, we ended up doing a bit of an untraditional financing route for the company itself. So what we ended up doing was we did a crowdfunding round and sold shares in the company to over 3,000 retail investors. We raised about 9 million doing that. Through that, we already had a lot of retail investor interest from 23 countries, and over 80,000 people had been interested in investing at that point. Unfortunately, the market kind of turned on us right when that was really getting off the ground. Interest rates went, skyrocketed. This is around 2020, late 2022, when all the interest rates skyrocketed and everything. Home prices stayed the same, interest rates went up, and supply was still as low as ever. So it was a bit of a tricky time for buying short-term rentals. And so what we ended up doing was just starting the process to go public and get listed so that these investors could have their exit.
Still here.
It looks like the connection went out for a second, just making sure. So we effectively started the process to go public in April of 2023, and maybe a little bit before that. And it's to list on the NASDAQ is about it's 6 to 12 month process, I would say. And it's a grueling process full of, because I always tell people it's effectively like you have to get your business to the public, right? You have to disclose literally everything about you, the founders, the leaders, legal, financials, everything. And so we put it all into one mega document called the S1. And you go back and forth with the SEC a bunch of times, and they issue you comment letters. We got quite a few comments, but eventually we went public in October 2023 through a direct listing and rang the bell in November, which was also a cool experience.
So it's really interesting that you've been able to make such a drastic pivot between being able to pivot to what you are today. What happened, or outside of the down market, was it primarily that lawsuit that got your attention and helped with the direction you are now?
I would say that. So when early on, we realized when we were still doing the short-term rentals, we wanted to do this thing at scale. And so very early on, before it became a big thing, we made an AI tool to quickly analyze properties. And, we called it the ReAlpha brain. And so effectively what it would do is rank a property from 0 to 100, how good of a short-term rental it would be based on some 50 data points. And so we had kind of been creating AI from the beginning, even before it became big. And when we went public, we were making a bunch of AI tools, and we had, several AI tools, but that NAR lawsuit was that big black swan event that made us double down on creating this end-to-end platform. And the vision for it has evolved over time, of course, as with anything, but it really became possible because of that NAR lawsuit. And because we're a public company, we can go out and do acquisitions a little bit easier. Having a liquid stock as a currency is very powerful motivator for companies to come on board.
Well, this has been a fascinating conversation, Paul. Before we jump into the closing out this episode, is there anything we should have tried to hit on? Anything we might have missed?
So personally, I've spent about at least 500 hours plus studying different ways that you could raise money from investors from kind of like a securities law standpoint, just because we were so involved in that before. We could have talked more about raising money from investors, perhaps. And I'm happy to have conversations with people about that if that's something that they're interested in doing kind of at scale with retail investors and things like that.
So we'd still have a few moments if you wanted to open that can of worms.
That's a big can of worms.
Well, why don't we just keep everybody on the edge of their seat, and we'll have you back and we can talk about that in particular. I wanted to remind everybody, head over to ReAlpha.com for more information. You can find some more details there. But if you're ready, then we'll dive into the rapid fire and close out this episode.
Sure, let's do it.
What lie do real estate investors often tell themselves?
So I think there's a recent one. There's one that's been said for a long time that was true, but I don't think it's necessarily true anymore. That is, I don't need tech. This business is about people, right? And there's no denying, of course, relationships are very important. I'm not saying they're not, but I think tech is reaching this tipping point where it's becoming so powerful that investors that don't utilize it are going to fall behind the ones that do for various different things, including analysis, underwriting, finding homes, even just asking for general advice, scanning pictures for issues with homes, things like that.
If you could go back in time and give your younger self a piece of advice, what would it be?
So I have a lot of things I could say here because I've learned a lot over the course of the last couple of years, of course. But I would say that there truly is no how, right? I would say stop looking for prescriptions to things to solve problems because these were written by different people in a different time with different circumstances, different characteristics, different motives, and with different resources.
Do you have a book recommendation?
I have a book recommendation. It's called U Squared Quantum Leaps by Price
Nope.
Pritchett. So I brought this one specifically because I think a lot of real estate investors I hear the term, one more deal or, slow gains, compound interest, that sort of thing, which is obviously very important. But that book for me opened me up to thinking in leaps rather than just air stepping and coming up with things that are so totally out of the box that you can simply jump from one side to the other instead of making the steps. So I think it's an interesting one for investors to read, to think about, jumping in the size of magnitude of deals or units or anything like that.
And finally, what process or tool have you implemented that's had the biggest time-saving impact to you?
Yeah. So lately, what I've been working on is I've been creating a personal AI board of directors. Effectively, I have a kind of a project folder in ChatGPT, and I have kind of specially written prompts for various different topics across life, everything from relationship to sales to general strategy. And I have a specific coach for each one. So every time I'm kind of facing a situation, just on the fly, I'll ask questions, upload journals, whatever to that. And it gives me advice back in the tone and using metaphors that I like. And so that's been a really cool thing I've been working on lately.
And that's actually where I think the power of AI is like the most underutilized. It's pretty crazy what you can do these days regarding that and training it to suit your needs like that.
Yeah, it's gotten so crazy powerful that it's getting a little scary, but I'm going to try and do some writing on this soon on kind of how to set this up if people are curious, but
Well, again, it's Paul Cecil. You can learn more at realpha.com and really appreciate your time. This was a fascinating conversation.
thanks for having me on, Jack.